What's up, you guys? Zoeb here from OneGlassTrader.com, and in this video we've got another brand new indicator release, the OGT Round Numbers Indicator. And big shout out to my boy Alistair, who's put this indicator together, not only for me but for you guys as well. So I would really appreciate if you would smash the like button and subscribe to the channel if you really enjoyed not only this indicator but the suite of indicators now that we have developed for the OGT community. Now, for those of you who've been following my content for a while will know that I've been, obsessed with round number levels and support and resistance, all that kind of good stuff, and how I use that as a Confluence trading approach in my trading strategy. So in this video, I'm going to very quickly go through the settings because it is a very basic indicator. It's just drawing lines on the screen at round number levels, but Alistair's programmed in some cool features inside there, which I think you guys will enjoy. And again, you can download this; it's absolutely free. Link is in the description. And then what I'm going to do is walk you through an example of how I use it inside my trading. So again, before I go into the settings, you can clearly see I've just loaded up the GBP USD chart, 30-minute chart, and there's in this piece of price action, current live price action, you can see how price respects round number levels. So what I've got here is I've got the round number levels at the 100 level and at the 500 level. And if I just take a quick snippet of this screen, just take the price action, you can see here, and again I'm going to try to do this with my finger on my touchpad. As you can see here, how price has respected that level here, all of this action over here respects once there, twice there, and even current price action, you can see there how it's respecting that level there and over here as well. So again, previous resistance at this price action over here is again an opportunity here to potentially make profit from here. Now I've just drawn all over the screen, but hopefully that makes some sense to you guys of how powerful these natural support and resistance lines are. So I'm just going to very quickly go through the settings for this indicator. So one really cool thing, and I'm going to start producing some indicators going forward, is to actually hide the indicator but not have it removed from your input settings, because sometimes you don't want all these indicators on your screen, but you really can't be bothered to keep deleting them and reloading them again and putting your settings in there. So it's set a feature so you can do hide all levels, and it's as if the indicator is not there, but as you can see, it's still available over here with your predefined settings. So I think that's pretty cool. And you can also hide the 00 level or the 50 level. And what is also added in is 2 custom levels. So if you wanted to draw support and resistance lines every 20 pips as this is set in, or every 80 pips, or however you want to do it, this this indicator will allow you to do that. So, and again, it's all got all the usual stuff where you can set the 0 and 50 level colors, and you can set the custom level colors, line width, and all that kind of stuff. And again, don't need to worry about the bottom stuff. But as you can see, it's a very basic indicator, but like I said, it's a very powerful indicator from that respect. So hopefully that makes sense to you guys. And again, it's really simple to use, and there's many ways you can use this indicator. And now what I'm going to do is show you guys how I use the indicator when I trade, especially when I trend trade. So it's going to go through a number of things, and what I've done is taken a screenshot of the USD chef from a couple of weeks ago, and you guys will know that, as you can see from the trend dashboard, that this this pair has been absolutely tanking, and there's been multiple opportunities to bank 1, 2, 3% here, and I've enjoyed this pair for the whole year, to be honest, because it's pretty much been in a downtrend for the whole year, and it's been one of my favorite pairs to trade. So if I just walk you guys through what I've got on the chart at the moment, and then I'll walk you through in terms of one of many ways that you can use the round number indicator as part of a Confluence trading strategy. So the indicators I've got on the screen now is obviously the round numbers indicator, and again it has got the 00 and 50 levels inside here. We've then got the trend dashboard, and for those of you who are new, again, another free indicator. I'll link to all those videos in the top right hand corner. And what the trend dashboard does, it utilizes 3 moving averages which are completely customizable, and then if they're all aligned in the right direction, it will tell you whether for a particular time frame, whether it is trending downwards, so in red, trending upwards, which is in green, and in grey, which, as you can see in the 4-hour chart, is where the MAs aren't actually aligned and they're kind of crossed over and all that kind of good stuff. And the reason why we're using this is that it just gives you a visual overview, pictorial view of a pair, and you can clearly see that we are in a downtrend. And obviously this settings is for the last bar that we got over here, but it's been pretty much looking like this throughout this whole period, which is the bit we're going to look at, and opportunities to trade inside that area. So that's the first bit. The next bit is I do have a set of moving averages, which is part of Guppy's multi moving averages, and again I'll link to that inside the description and in the top right corner. But this gives me a visual view of the trend for the particular time frame that we're looking at. You don't need to have it, but I like to have it in Confluence with the trend dashboard, because the trend dashboard only utilizes 3 moving averages, and they're a bit more long term than these particular ones that I'm showing now. And again, I will list out these moving averages in the description, so you guys can kind of copy those moving averages if you need to. And then the last one indicator we've got is the MACD, and again I use the linear weighted moving average MACD. Again, link is inside the description to pick that up. It just gives you more a smoother kind of look than the traditional MACD. And again, I use it primarily for divergence, but you can use it for entry signals and all that stuff, and we'll go through a couple of examples. So that's what I've got on my screen. So we know now, looking at the trend dashboard, that the USD Swiss franc is a particular pair that we are interested in trading. Now, once we've identified the pair, what we're looking for is the moving averages for the on the screen all to be in a certain direction, and you can clearly see they are all pointing down and they're not crossed over, and they're all fanned out, and the more they're fanned out, the stronger the trend is. So that's what we're looking for. So we've got a downtrend signal from the trend dashboard, we've got downtrend signal from the moving averages on the current time frame, and what we're then looking for is for price to pull back to a round number level. So as always with trend trading, you always want to look for value. You want to look at pullbacks into a trend, and there's many ways you can look at pullbacks in the trend. And one of the ways that I like to use is using round number levels. So we can see here that we've got a move down, and then we've got this retracement here at this round number level here. And when price gets that level, what I'm looking for is the following. I'm looking for, where is price in relation to the moving averages? And the good thing is that the price is actually inside the moving averages. And generally when price, like you can see in this example over here, as price then continues to go into the moving averages, and if this started to trend upwards, you can see that there's a lot of crossover or compression as Dal Guppy goes in, showing that there could be a potential of a reversal. In this example here, as price goes in, you can see that there's not that much compression, and therefore they're still quite fanned out, signifying the strength of the trend, which again is a good signal to be seeing. So we've got a pullback into here, and also the actual strength of the trend with the moving averages not really compressing. So you've got the long-term moving averages pointing down, the current time frame moving averages pointing down. You've got a pullback into the trend, and the moving averages are still quite strong. Now, this to me is a perfect setup to look now for a short entry. Now, there are a number of ways to enter a trade. You can use breaks of lows, shorter moving term averages, crossovers, fractals, all that kind of good stuff. And if you guys are interested in looking at a top 10 videos of entries, for example, comment down below and then I'll look to create you that video. But to keep things very simple for this example, we now know that we want to get into this trade. One simple way of doing that is by looking at the low and then when price breaks that low. So in this bar here, when the bar closes or touches, you can put a limit order in there. When that happens, you get into the trade and go short. Another way to do it is by doing the MACD crossover, which was at this doji candle over here. And apologies, my drawing is absolutely awful today. At that doji candle over there. So whether you chose the low, which would have been slightly a later entry than the doji one, either way, you're just looking for a signal to go get short in the trend. And the reason why you're looking for it to break lows or cross over is because you want confirmation that price wants to go down. So that's the reason why you do that. And then in terms of a stop loss, take profit target, and risks, let's just say you got in through the low. Again, there's two ways you can do this. You can either do this on top of the highs. I want to use my finger, it might just be easier, on top of the highs there. But what I would do is actually put it above those moving averages on there, which then gives you that extra layer of protection. So if you think about it, you've got 3 layers of protection. Price has to get through this psychological round number level, has to break this high, and then has to break the high of the moving averages. So you've got strong layers of protection there if price then does start going against you. And then in terms of take profit targets, there are two things I look for take profit targets. You either look at a previous low, and again, I've taken a screenshot, so don't have previous price action on here. Or the second thing that you do is you target just, in this case, just above the next round number level that you want to get to, because there's a high probability that price will get to this level at least to find a temporary pause. And that's the reason and the beauty for using round number levels as take profit targets. Similar to pivot levels as take profit targets, round number levels as take profit targets, again, are psychological round number levels or psychological levels in the market that price is magnetically wants to get to due to the herd of the crowd and people inside their mentality. So that would be there, and then that would be the kind of thing over there. That might be just under a 1% kind of return, but again, I think the probability is in your favor all day long to kind of get that. And again, I like to look at 1%, 1.5%, 2% in terms of return, in terms of my risk and all that kind of good stuff. Whereas again, you can move stop loss to break even when you get to here and put your stop loss here and then trail this all the way down. However you want to manage the trade on that, that's down to you and your personal trading style. So that is the first entry you would have got into there, and then you would have made, what 1%, 2%, depending on your risk factor. And I'll go on to risk in a second because I think it's very important to highlight this particular situation. So let's just say you did do 1% risk, and then you got out at this level here. It wouldn't have been a 1-to-1, so you would have been 0.8% return on your money. So that's the first one. And then what we've got over here is we've then got another move through that round number level, and then another push up again. Now at this level here, it's same thing what we're looking for. We're looking at the trend dashboard. We're still looking good over here. Still pretty much all red along the longer term time frames. The moving averages are really fanned out, really strong trend. The only thing I don't like about these is two things. The first thing being is that I want price to be closer to the moving averages, because as you know, price likes to use moving averages as like temporary support and resistance as well. It's a bit far away from my liking. So that's the first point. The second point, what we've got here is that we're starting to get bullish divergence. Price is making lower lows, but the MACD is making higher highs. So again, it doesn't always happen, but there is now potential here that price could reverse over here and start going inside that direction over there, which is not what we want. However, looking at the longer term time frame and everything else, I I still want to get into this trade in a short position. But in this particular example, instead of risking 1% like I did in this particular example here, I'm going to risk less, so 0.5%. And this is where the beauty of risk management comes into play, because I'm less confident. If I was at the charts now in this particular situation, I'm less confident that, for price to get here. In hindsight, it's a beautiful thing that price did get to that level, and I would have made a decent return on my money at 1%. But I wasn't confident that with that overall approach. That's how I would be feeling. So in this particular example, I still want to get into the trade because everything is still aligning, but I'm conscious that price is further away from your moving averages, and we're starting to get bullish divergence. So if I'm wrong, I'd rather be wrong and lose less money than be right and win more money, if that kind of makes sense. So in this example here, again, we're at this price is at this level over here, and then we wait for that low to break, and then as you can see, I will enter in around here. I would probably at this stage here put my stop loss above the round number level, and then again looking to either target a 1-to-1 wherever that looks like, which is probably about, I don't know, here maybe, which again is comfortably made. If you're more aggressive, you can look at it just before the round number level there, and you're probably making around 2 and a bit percent inside there. So that is something there that I really think that you guys will enjoy doing. And now you can see here is that we've got you can see that price is now really interacting with this round number level over here. And again, I'm not too sure what's happened to current price action, but I'm looking for something around here, and I'm pretty sure there's some missed pivots over here somewhere like that as well. If you want to start looking at the missed pivot strategy, which again I'll link to in the top right corner for you to look at. But hopefully that gives you some kind of view in terms of how I use it. I've got a number of videos across my channel talking about round number levels as support and resistance for stop losses and take profit targets. And like I said, what I'll do now is I'll put some of those videos on the screen along with the trend dashboard, the missed pivots videos, and all that kind of good stuff. And download it now. It's absolutely free. Link is in the description, and I shall see you guys in the next video.